Welcome back to RoxomTV. I'm your host, Jemmy. So Bitcoin has crashed, and honestly, this did not come as a surprise. Weeks ago, our technical analysis warned that downside risk was building, and that's exactly what we're seeing today. But it's not just Bitcoin or crypto. More bad news is hitting the market, and this time is from AI. Cybersecurity stocks fell off a cliff, and that's raising a big question. Is this just panic, or is something structurally changing? Should we be worried? Should we be like a massive buying opportunity? So we'll break all of that down today. We'll also be looking at a major headline in Bitcoin mining. One public miner just sold its entire bag, so its entire Bitcoin treasury. So the big question is, has Bitcoin finally bottomed, or is there more pain ahead? And toward the end of the show, we have a special guest from Antidote joining us live to share insights from inside the industry. A lot to cover today, so let's just get started. Well, we're actually covering PayPal because PayPal pumped quite a lot in these couple of days. So let's just start with the good news first. All right, so PayPal, one generation built global e-commerce with one blue button. Now that empire may be up for sale. Bloomberg just reported that at least one major competitor is evaluating a full acquisition of PayPal, while others are looking at buying pieces of the business. And here's the part that sets everything. If we hop on to PayPal stock price, it actually pumped quite a lot. So the stock jumped nearly 10% on this news, and it sets everything about the deal. When a company's valuation rises because it might get bought, that tells you the market has more faith in someone else running it. So let's go back to 20 years ago for PayPal. If you were let's say, a small factory owner in China selling on eBay, the hardest part wasn't language or shipping. It was how to get paid. PayPal actually solved that with one blue button, a few lines of HTML code, and suddenly anyone could accept global payments. It democratized online commerce and it became the default checkout option worldwide. But let's fast forward to today. What we have today. So we have Stripe, we have Apple Pay, Google Autofill, Wise, Shop Pay. The industry basically grew up a lot, and PayPal did not move as fast. So that's why it has been failing these days. So on 3rd of February, PayPal actually reported an earning, and after that, of course, the stock fell 20% in a day because what happened is the reported Q4 2025 earnings, they missed an analyst expectations with an EPS of $1.23 against the $1.29 estimation. And not only this, the active user growth slowed to just 1%. Transaction volume per active account fell 5% over the last 12 months. The CEO of PayPal actually stepped down, and here's the bigger picture. At its pandemic peak, that means back in July 2021, PayPal was actually worth around $363 billion. But if we fast forward to today, the market cap is only around $38 billion. So, in other words, that's a 90% decline in 5 years. The PE ratio briefly dropped below 8. That's not a growth multiple, that's a distress multiple. So, question, what went wrong for PayPal? Well, former PayPal president David Marcus publicly criticized the company. He said the leadership shifted from being product driven to financially driven. So, what this means in simple terms is that they optimize spreadsheets instead of building breakthrough products. Hence, they lost the mojo of the company. Like Stripe still has it, obviously, they're still around. Apple Pay still has it. Revolt still has it, but like PayPal used to have the mojo, that wild problem-solving energy that built the early internet payment system, kind of fading away. And if we hop on to other competitors that they have, for example, Famil is one of the few growth engines left. It turned payments into social activity. And right now, like Family, it kind of became a fad. So in 2025 for Family, they have $1.7 billion in revenue, 100 million monthly users, 50% growth in pay with Family, and 40% growth in tap debit card users. So those are really strong numbers, but there are cracks. User growth is only 7%, while revenue grows 20%. That means monetizing the same base has become harder, not like expanding to new users. And Family is still largely US only. It hasn't become a global infrastructure just yet. And another big challenge I really want to touch upon is, of course, stablecoins. Because like PayPal launched its own stablecoin for PYUSD. It now has about like $4 billion in market cap. That sounds impressive. But if you actually compare to the giants in the crypto market, so of course the two giants we have is USDT and USDC. So USDT, they have $183 billion in market cap. And the second biggest, USDC, they have $74 billion market cap. So PYUSD, the stable coin of PayPal, is like a baby. It's like extremely small, even in the crypto world. Even PayPal over 4% yields to holders, but like stablecoin adoption really does depend on distribution and network effects. It's not just like the brand of PayPal. Then there's AI agent payments. PayPal is integrating with AI platforms so that agents can complete purchases directly through APIs. It's very forward thinking, but if AI platforms control the user interface and the data, they may also control the payment layer, which leaves PayPal in a very weak position. And let's not ignore what PayPal still has, because like that was a lot of negativity around PayPal. But like PayPal is still really strong. Like first of all, Braintree powers many global platforms. Pay later processed over $40 billion in 2025. They still have 400 million active accounts and over 6 billion in annual free cash flow. So PayPal, in other words, there's still some very serious infrastructure. Those assets are extremely valuable to any company trying to win the AI commerce era. The question isn't whether PayPal has value, it's whether PayPal itself is the best owner of that value. So the bigger picture here, PayPal once changed the world. It made global payments accessible to anyone with a website. That history doesn't disappear, but the payment world today is faster, more integrated, and more embedded. Mojo, of course, does matter, especially in the payment world. Product conviction matters as well. And right now, the market is asking, can PayPal rediscover the spirit, or will the next chapter of this empire be written by someone else? Of course, we'll be closely watching it on RoxomTV. All right, moving on to the second news I really have to cover, because like the cybersecurity stocks are down for a second straight day. It looks very concerning. And no, like why is it down? It's not because of a data breach. Like turns out this is about AI disruption fears. So what happened is on Friday, Anthropic quietly launched a new AI security tool. By Monday, Wall Street started selling first and asking questions later. So let's walk through what happened, why stocks dropped so hard, and whether this is real risk or just overreaction. So let's take a step back at what Anthropic launched. So on Friday, Anthropic rolled out a new feature called Cloud Code Security. This is not a standalone product yet. This is a new capability inside Claude's coding interface released in limited preview. So what does it do? I'm glad you asked. Basically, this tool would scan entire code bases for security bugs. It would find complex issues that old rule-based scanners miss. It will also suggest fixes, but like, of course, humans will still have to approve everything. Anthropic said they tested it internally and found hundreds of serious bugs in open source code that had been reviewed for years. So the message from Anthropic team is quite clear. AI is coming for security whack, and the defenders need to move fast. And what we saw on Friday. So Friday had a panic selling day, and Monday made it worse. Here's what dropped hard. So let's take a look at, first of all, CrowdStrike. So CrowdStrike dropped around, so in the past 5 days, it dropped around like 9.8%. The second one we could look at is Zscaler. So Zscaler dropped like 10%, basically just over the weekend. And GitLab dropped 8%, JFrog dropped nearly 25%, and the entire cybersecurity ETFs down around 5%. So this wasn't about earnings. It was the same AI will eat software trade that has already crushed Salesforce and ServiceNow this year. Anything linked to code scanning or software security got hit hard. So after the dust settled, analysts kind of pushed back on the idea. Bank of America said this tool mainly threatens code scanning companies, not full security platforms. So CrowdStrike's CEO, how he responded directly. So he's saying that scanning code does not replace real-world security systems. Stopping breaches requires independent and battle-tested platforms. So what he's saying in simple terms is that AI can help developers find bugs, but it does not replace endpoint protection, identity security, or live threat response. Most analysts say this sell-off looks a bit overdone. On the same day, let's also hop onto IBM, because like IBM stock dropped 13% in the past 5 days. And this wasn't about cybersecurity. It was about COBOL. So for those of you who don't know, COBOL is a programming language widely used on IBM frameworks, mainframes across banking, insurance, and government systems. Modernizing a COBOL system once required armies of consultants spending years mapping workflows, but Anthropic highlighted that Claude can now help automate the hardest part of modernizing COBOL systems. If AI can do it faster, that threatens a core IBM revenue stream. So, of course, the market did not like that and reacted instantly. So going back to the news, the disruption that Anthropic has been causing. So Anthropic is hosting an enterprise AI briefing. So basically what they're saying is more demos, more agent tools, more automation stories. That means more volatility. And here's the key point. These tools are still extremely early. They require heavy human oversight. Enterprise adoption will be slow because of trust, compliance, and liability. Cyber threats are still growing, security spending is still rising, which is why many on Wall Street are calling this a sentiment-driven sell-off, not so much as a fundamental collapse. Bottom line is, markets are pricing in instant AI disruption. Reality usually moves slower, so AI will change security, but replacing full cybersecurity platforms will take years, not weeks. Until we see real adoption numbers, do expect more swings though. All right, so that's the latest on the cybersecurity sell-off and the AI-driven fear hitting markets. We will take a short break here, and when we come back, we'll shift gears and dive into a major global story, the killing of the world's most wanted drug cartel leader and why Mexico is now facing widespread chaos. So stay with us, we'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth.
The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second.
Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV, and thanks for sticking around with us. We are now diving into what happened in Mexico because Mexico is facing a serious security crisis. Over the weekend, the leader of one of the world's most powerful drug cartels was killed in a military operation. He had been the most wanted cartel boss for years. Within hours of his death, violence spread across multiple parts of the country. And this was not a small event. It caused nationwide disruption. So what happened after the killing? Soon after the operation, cartel members hit back. What they did is that they blocked major roads, they burned trucks, they set cars on fire to stop traffic. Security forces were attacked. As a result, around 400 flights were cancelled. Thousands of travelers were stuck at airports. Schools, of course, closed. Public transportation stopped running. People were told to stay indoors. Hotels in popular beach cities saw mass cancellations. Foreign governments warned tourists to avoid traveling to Mexico. And there are videos showing that thick black smoke rising from highways. Drivers left the cars and ran away. Parents rushed to schools just to pick up their kids. And in some towns, people had gunfire for hours. Military vehicles moved through neighborhoods. Residents used WhatsApp groups to warn each other, which areas apparently were the most dangerous, and just to avoid going to those areas. And this was not random violence. It was organized and fast. But let's take a step back. How did the operation happen? The cartel leader was found after weeks of tracking. Mexican military forces carry out the raid with the help from the US, so US intelligence. A heavy gun battle followed. So during the clash, 25 security officers were killed. The cartel leader was wounded and he later died while being transported for medical care. Authorities seized armored vehicles and heavy weapons. The government called it a national security emergency. What happened this week absolutely shocked the whole world because this leader of the drug cartel had avoided capture for more than 10 years. The US had over $15 million for information leading to his arrest. Under his leadership, the cartel became a major supplier of illegal drugs, of course, including fentanyl. His death ends a long manhunt, but it does not end the cartel at all. What happened next? This is the dangerous part. When a cartel leader is removed, power struggles often follow. That could mean internal fighting, more violence, battles with rival groups. Mexico has seen this before. After past arrests, violence actually rose, so it actually increased. The government will send thousands. Government has sent thousands of extra security forces to the affected areas. Officials say the situation is under control, but the next few weeks will be critical. The affected region deeply depend on tourism. Even short periods of unrest can hurt hotels, reduce flights, cause local jobs, and damage local businesses. The government is under so much pressure to restore calm very quickly. So now let's tie this back to the US, so the United States. This cartel was a major source of fentanyl entering the US. Fentanyl is now one of the biggest causes of overdose deaths in the United States. The US intelligence helped track the cartel leader. For Washington, D.C., this is actually seen as a major win, but expectations are now higher. If drug flows do not slow down, pressure on Mexico will increase. So the bottom line is the cartel leader is dead, but the cartel itself is still very much active. The fast and widespread retaliation shows how powerful the group remains. Mexico is entering a very unstable period, but the real question now is quite simple. Like, does this bring order or it just bring more violence to the country? Of course, we'll be watching this closely and bring you updates as they come in. All right, so that's the situation on the ground in Mexico, a major security shock with serious regional and global implications. So we'll take a short break now, and when we come back, we'll turn back to the markets and look at BitDeer, why the company sold its entire Bitcoin treasury and entire BTC back, and what tells us about miner stress and whether BTC Bitcoin is getting closer to the bottom. So stay with us. We'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth.
The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV, and thanks for sticking around. We're now going to spend much time on the whole BTC world because a lot has happened. There is a big headline, especially in the Bitcoin mining world. So BitDeer Technologies, which is a public Bitcoin mining company, has sold its entire Bitcoin treasury back. As of 20th of February, the company now owns 0 BTC, down from roughly 2,000 BTC at the end of last year. And so this is very much not a trimming. This is a full exit. So what actually happened? Let me give you the timeline. In the week ending of 20th of February, so BitDeer mined 189 BTC. This is as usual. They sold all of it and also liquidated its remaining 943 BTC reserve. Just 1 week earlier, that 943 BTC was still on the balance sheet. So let's hop onto the more official graphs here. So within 7 days, BitDeer went from normal miner sales to selling every last Bitcoin that they owned. That's highly unusual for a Bitcoin miner. So if we hop onto the graphs, on 19th of February, they still have 943 BTC holdings on the balance sheet, and right now went down to 0. So what BitDeer is saying, BitDeer addressed the move directly on X. So they said their decision, to sell Bitcoin, should not be a concern for the broader market. They're preparing liquidity for powered land acquisitions. Their hash rate will continue to grow, and they will continue to mine Bitcoin for shareholders. So what this means in simple terms, they want cash, not BTC right now. So most public miners sell newly mined Bitcoin to pay for electricity, hardware operations, but they usually keep a treasury reserve to stay exposed to Bitcoin's price. I mean, at the end of the day, they're Bitcoin miner, right? But BitDeer did not do that. They went down to zero on the BTC holding. For comparison, Mara holds around 53,000 BTC. Riot holds around 18,000 BTC. Strategy, of course, like being the biggest holder around the whole world, they hold 717,000 BTC on the balance sheet. BitDeer now holds zero, and that's the outlier. This sell did not happen in vacuum. Recently, BitDeer raised $325 million via convertible note, and they actually sold $43 million in equity. What they're planning to do is expanding into AI and data center infrastructure. At the same time, for BitDeer, the gross margin fell to 4.7% in Q4, down from 7.4% a year earlier. Mining economics are tight, especially post-halving. It just happened every 4 years. So mining is really difficult right now. Hardware demand has softened. Shares dropped after the capital raise. This looks like the liquidity pressure plus strategic shift. So why does this matter? Because this is not just about BitDeer. It shows the hard choice miner face right now, like whether they hold BTC for long-term upside or they sell immediately to survive, expand, and pivot. A lot of Bitcoin miners are actually pivoting to AI and data center these days, and BitDeer shows liquidity over exposure, and that tells you how tight conditions are for some operators out there. And here's the important contrast. Even as BitDeer sold all of its BTC, Bitcoin hash rate is near cycle highs. More machines are coming online. The network is more secure than ever. So while individual miners may struggle, the Bitcoin network itself is getting stronger. Company balance sheets can crack, but the protocol of Bitcoin will never crack. BitDeer is selling all this BTC is actually a signal like capital pressure is real. The mining business is changing, and AI pulling attention and funding away from pure BTC exposure. But at a network level, Bitcoin keeps getting harder, stronger, and more secure. Miners can sell, but like hash rate does not lie. Speaking of which, let's very quickly hop on to some Bitcoin TA analysis, so chart analysis. So Bitcoin right now, again, as I mentioned in the beginning of the show, this fell off. So this sell-off doesn't come as a surprise because one, we spotted this bear flag weeks ago. Actually, it has been forming since 20th of November 2025. So point being months ago. And of course, bear flag is a bearish pattern. And another bearish pattern that we spotted, especially yesterday live show, we talked about this, is the descending triangle. That's bearish pattern number 2. Since we're starting off with the daily candles, we will build up the time frame, so from daily, weekly, and 2 weeks. So the reason why we do this is that, for the traders out there, or maybe swing traders, they might want to look at the daily candles, or maybe some people would hop onto the hourly candles because they like to day trade a little bit. But for the weekly candles, it's more suitable for a longer term investor. So I'm trying to to start from the shorter time frame, a little bit for everyone. I'm not your financial advisor. I don't know how your portfolio looks like, but according to your own preference, then you could look at different time frame for the Bitcoin candles. So for the daily, one prediction that this is just like a rough prediction, because TA is all about probability, looking at the most likely outcome. And I like to draw similarities to playing poker, because when you get new cards, your probability actually change. So it's a little bit similar for looking at the charts. So the bear flag that we spotted early, okay, we called the bear market rather well. Even back in September, talk about taking profit, talk about the likelihood, there's a possibility that the 4-year cycle is still playing out. So that's what we call beautifully well. And if we basically take the length of the basically this pattern, and if we just go to the breakout point of the bear flag, we'll get an estimation like a bottom of around like $45,000. Of course, this is just like rough estimation. So this is the one. Okay, let me draw the horizontal line and put it right there. So what I've done here is actually I've set some buy orders around $45,000, and then I've got another one according to the descending triangle. So descending triangle here is more like an immediate price action. So the bear flag is a little bit longer term. We could take that, use a different mentality when it comes to trading. But the descending triangle, this is more immediate price action. So I've got another price order, Bitcoin order at around $57,000. So those are the two critical levels I'm watching, because like these two patterns, they are both bearish patterns. And as I keep talking about, like no one would predict the future perfectly well. Like I don't have a crystal ball. I don't know exactly how low Bitcoin would go, but judging from a technical perspective, 60K does not look like a cycle bottom to me. I do think there will be lower to go, simply because if we look at this sell-off, this pattern, it happened so quickly. So we fell off the cliff. So we dropped like 30% in just like a week. Like usually it would take like multiple weekly candles for us to drop that much. But like the fact that Bitcoin dropped so much so quickly usually signals that there will be lower to go. Like this is not a bottom yet, because a cycle bottom, it would take like multiple weekly candles to form. So my strategy right now is just like got a bunch of buy orders, 57K and also 45K. I'm not sure if we go as low as 45K, but like, I mean, I got it some entry price right here. So let's see how it goes. And in terms of how long, like how much longer we have to suffer in this bear market, I like to bring out the weekly candles for now. So according to the 4-year cycle, we will form a cycle bottom around 5th of October 2026. Like again, this is just like it has been played out for the past 2 times or 3 times. There are a group of people completely against the 4-year cycle, because like, okay, Jamie, I mean, Bitcoin has only been around like less than 2 decades. So this 4-year cycle, there isn't much data point. I mean, that is a really valid argument that they have. But like this magical number of 1064 days is just like play out over and over again, like for 3 times. So if we follow exactly the 4-year cycle, the bear market, like it will stretch to like 365 days. That means a year of going down. Of course, you'll have like pumps like this, and people will be in denial. Hey, it's just a correction. But like if we zoom out, there's only further to go down. All right. Same thing happened in 2022. Like right here, we were in denial phase. So that was back in March or April 2022. People think, okay, this is just a small correction. MicroStrategy was buying so much. I mean, that was, yes, even in the previous cycle as well. But like we head down to a cycle bottom, and it formed on in November 2022. So that is exactly 365 days yet again. So if this were to happen, I'm expecting a cycle bottom to form around that time. Like this cycle is a little bit interesting, because as I mentioned, we fell off the cliff so quickly. So that means, seriously, I do not think we have seen the cycle bottom. And according to second valid reason is according to the 4-year cycle as well. And another reason is that, okay, what I've got up here is the two indicators. Actually, the 50-week moving average, the blue line on the top, and also the yellow line at the bottom. The yellow line is the 200-week moving average. And when we lost that, so 2 consecutive weekly candles, if we close below the 50-week moving average, that is definition of a bear market. And we will visit the 200-week moving average, the yellow line here. And this cycle is interesting because like we dropped okay, have we have technically speaking, if we zoom all the way down, we haven't really touched the 200-week moving average, but like we went close enough. And this is like actually it developed faster than I expected. I thought it would take like a bit more time before going near the 200-week moving average. But like the previous bear cycles, we not only finding the 200-week moving average, but we went below the 200-week moving average. So the 200-week right now is around 60K. But like since the previous 2 cycles went below, there's still a possibility that we're going to go below 60K. So according to the bear flag, it's going to be $45,000 and stretch all the way to 5th of October 2026. Again, like I don't have a crystal ball. I don't know how low it would go. But like what I've got is, if you've been watching my analysis live, you know I've got like a bunch of buy orders. 77K was the first one. The second one, that trigger was 64 or 63K, somewhere around that. And then the third one that I've put here is 57K. And then the fourth one is 45K. Like these are the areas that I'm going to purchase relatively bigger bags for BTC. Because like now that we've dropped so much, if we take the highs at 126K down to 60K, that was like a 52% correction. Yeah, people still don't want to admit this is a bear market for some reason. And yeah, I mean, that's what my strategy is. I've openly talked about shorting the market, which I've been doing so in November, especially for altcoins, because like Bitcoin is still the ultimate king in the entire crypto market. And when Bitcoin dropped, altcoins would drop even further. So like making profit on shorting altcoins is kind of like a no-brainer. But like right now, since it's dropped so much already, and I've been shorting for months, my strategy kind of like sitting on the sideline when it comes to shorting altcoins, because like the risk is like a little bit not worth it in my opinion. I'm not picking up, like I'm not buying any altcoins at the moment. Kind of like sitting on the sideline. Let's see how it goes. Because like when I was shorting market, I didn't pull any leverage because like we have openly talked about the liquidation like every single day. Okay, yeah, that is like another instant example. In the past 24 hours, $373 million got wrecked. So both long and short positions. So point being, like pulling a leverage for when it comes to trading altcoins or Bitcoin as well, like I don't think it's wise. And going back to why I'm not shorting altcoins like I was back in November is that, okay, it's dropped so much. And then since I'm not pulling any leverage, like that means my gain could be 100% max, but the downside, it could be like more than 100%. So yeah, I mean, in my opinion, it's not worth shorting altcoins right now. I think the prime time was back in November. I mean, if some of the viewers out there are smarter than me, then you guys might be shorting in September already. But like, I pulled most of the short positions back in November. And yeah, right now it's just like a quick update to where things is going and my portfolio. All right, so let's hop on to the 2 week as well. So slowly building up that time frame even more. So using a long-term investment mentality. So there are still two lines. So the top one is the 50 SMA, the bottom one is 200 SMA. And one thing I find it really concerning is that we close below. So historically speaking, when we close below the 50 SMA, there's like, of course, we're gonna there's more room to the downside, because like last time when that happened, it was back in 2018, we dropped another 45% before finding this exact cycle bottom. And same thing happened in so in April 2022. So we lost that. So we actually have 2 week candles closing below the 50 SMA. And we went further down. So that was another 56% correction before before finding the cycle bottom of like 15 something K. So point being, in this cycle, we lost that 50 SMA on the 2 week chart as well. That is another bearish signal. Like so far, all the setup, all the technicals, all the charts are telling us that is lower to go. 60K is not the cycle bottom. And yeah, going back to the strategy that I've got here, like these are the criticals level I'm watching. And when we hit this level, like I'm purchasing like a relative bigger bags, because like I'm not afraid of bear market, because bear market is when you make generation wealth. Like for bull market, it sounds very exciting because you are stuck on your laptop. You are addicted to looking at the price every single minute, like everything just like keep going up. Especially if you guys were around in a previous bull market in 2021 or even earlier. So that was a very exciting time. But like trading wise, for like in a bull market, it was fun. It was a quick flip, but like it's not the same as like making generational wealth, because like even if you purchase the bottom at 50, well, I mean back in, sorry, wait, where I'm looking. So let's go with the weekly chart. So if we purchase the bottom in a previous bear cycle at 15K, like you still doing really well. Of course, like no one would predict the future that well. But okay, let's say, assume that you purchase at like 16K. Right now, you're still sitting at like more than 280% profit, despite Bitcoin down 56% from its all-time high of 126K. So that's what I mean by generational wealth. And you can only find that in bear market. All right, so that's for Bitcoin. Let's actually hop on to Ethereum. I want to spend some time to talk about Ethereum because we haven't talked about that in ages. So let's start with a simple fact. This actually happened on-chain. That's the beauty of blockchain. And data from Roxom shows wallets linked to Vitalik Buterin recently moved and sold Ethereum again. Over just 2 days, about 1,869 Ethereum, roughly worth $3.67 million, was sold. During the same period, ETH fell around 5 to 6%, dropping from about 1,900 to 1,800. This comes after a large sell earlier where more than 69,000 ETH, so I mean 6,900 ETH, over $14 million moved while ETH fell roughly 22%. Now, ETH trades billions of dollars a day, so on paper, these amounts shouldn't matter, but in reality, they do. So when the co-founder of a network is a known seller and his wallet is publicly tracked, the market, of course, reacts. This isn't about blame. It's about structure. Ethereum is identifiable leadership. There's a visible founder. There's a foundation treasury and real people making real decisions for the foundation. So that setup allows coordination and development, but it also means human selling pressure exists inside the system. People fund operations, people diversify, people sell, and markets front run that. And if we compare that to Bitcoin, like Bitcoin creators Satoshi Nakamoto is believed to have mined about 1 million BTC in early days. Those coins have never moved. Not in 2013, not in 2017, not in 2021, not during crashes or not during rallies. There is no foundation treasury, no CEO, no leadership wallet to watch, no human selling at the origin. So Bitcoin removed human sell pressure at the base layer. And in stressful market like this, like founder-led system reflect human behavior. That is when it comes to risk management or funding needs, treasury decisions, or even personal incentives. Bitcoin is different from this side. Like no one to panic, no one to rebalance, no one to adjust policy. One system relies on identifiable people, the other minimize them from day one. That's not philosophical. That's monetary architecture. And in markets like this, architecture does matter. So, all right, that's the latest on Vitalik's ETH sales and what it tells us about founder-led crypto projects versus Bitcoin structure. But we'll take a short break now, and when we come back, we'll be joined by Ben, who's the CEO and co-founder of Antidote and the CSO at SetBD. He's worked at the intersection of gaming, Bitcoin payments, and has a deep feel on how Bitcoin actually gets used in real world beyond just price charts. So it's a conversation that you won't want to miss. Stay with us and we'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth.
The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time.
Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back everyone to RoxomTV and thanks for staying with us. We are now very excited to have a special guest joining us right now. So with us is Ben Cousens, the CEO and co-founder of Antidote and also the CSO at SetBD. Ben has a unique background that sits right at the intersection of gaming, payments, and Bitcoin. And he's been working hands-on with how Bitcoin actually gets used in the real world, not just as an asset, but as money. So today we're going to talk about where Bitcoin adoption is really happening, how gaming and digital economies are quietly onboarding the next wave of users, and what most people still misunderstood about Bitcoin payments. This is going to be very practical, ground level conversation. So Ben, welcome to the show. Yeah, so Ben, since this is your first time here on RoxomTV Hong Kong, why don't we start over with a little bit of your personal journey? Because I was going through your background, and I have to say it's a very experienced resume. So you went from game developer and finance and VC and now Bitcoin? Like, tell us more about your journey.
Yeah, sure. I mean, I think at the heart of it, I'm just a nerd. So like, I did begin my career in video games a very long time ago when I was a teenager, and it's because I was an avid gamer. I found out a way to play video games for money, which was in game testing. So I thought I would do that. And when I graduated, I did actually join the game studio I was working with full time, but I was too materialistic. I wanted to, in the UK where it was based, it was outside of London. I wanted to live and work in London, and that wasn't possible in the gaming industry, at least not at my age. So I kind of switched up my career and I did a master's in finance, and I ended up going into banking, initially purely for the salary. And what I found was I got a big, very heavy training in financial modeling, financial analysis. I worked with a lot of very successful founders. I was lucky enough to work on SoftBank's acquisition of Arm, the chip company, fundraisers for Epic Games, several capital raises for sort of Series C stage startups. And during all of this, I was actually still a nerd, and a friend of mine introduced me to Bitcoin. And I consider myself quite lucky because I was introduced to it not as a trading chart thing or like a go and buy this. I was introduced to it as an application. So I downloaded Bitcoin on my computer, and I used it to send and receive some money between he and I. And he was explaining that he uses it to send money back home where he's from. And my mind was blown. I was very impressed. I was a heavy BitTorrent user back in the day. So I kind of instinctively grokked that this was peer-to-peer money. And I started to look into it a lot more. And this was pre-Lightning. So I was still at the bank. I started becoming the crazy person at the bank who was telling all of the bankers, you've got to pay attention to this, etc. But it was a little bit early. I remember one of my bankers quipped that there was a new token called Ethereum Blue. I've never heard of it since that era, but that was how early things were. I mean, Ethereum was still a novice coin. From there, I actually went into venture capital. So in my traditional work and career, I had wanted to go from banking to VC. Ultimately, a good opportunity arose, and I joined Lakestar. It's a European VC, one of the top ones in terms of assets under management. They had invested in Revolut, Spotify, and a handful of others. I joined them to actually lead their video games investing, but I was also free to spend about 20% of my time looking into Bitcoin startups. And this was sort of 2017, 2018. And it was difficult to find stuff that was truly VC investable, in my opinion. I think when you're really being rigorous about being a venture capitalist, every dollar you put in needs to translate to $10 out. And it wasn't clear with Bitcoin companies back then how you would get there, particularly when measured against the sort of Bitcoin price appreciation. It was very hard to weigh up, shouldn't you just buy Bitcoin versus buying equity in Bitcoin businesses? But I did find one business, and that was ZBD. I was lucky enough to meet the co-founders when the business was about a month old. They were looking to solve payments in video games using Lightning. Obviously, I had this background in gaming. I was curious. I was very interested in Bitcoin at this stage. And the approach that they explained to me they wanted to take really resonated. So I wound up becoming a major investor in the business out of Lakestar. And ultimately, after the Series A, I began to see that they needed support and help with go-to-market, the commercialization of the product within the games industry. So Simon, the CEO, asked me if I wouldn't mind joining one day. I actually was caught by surprise by this, but I bit his hand off at the opportunity, and then I jumped into it. And if I skip forward a few years, we've now raised the Series C. The business is performing well. We're one of the only mainstream use cases of Lightning out there that doesn't involve just trading Bitcoin. And on top of that, I couldn't let go of that itch to work with entrepreneurs. And I could see many Bitcoin businesses starting and struggling, really needing to find that commercial proof point, that customer profile they needed to work with. So I set up Antidote last year as an incubator and accelerator, kind of like a Y Combinator for Bitcoin businesses. And we actually announced our first cohort next Monday. So things are moving fast.
That's definitely a very impressive journey because like I kind of want to go back to the early days because sound like you got into Bitcoin early, you first being introduced as like a more as a payments or downloaded the application. So that was exactly when was that? Was it like before 2017?
Yes. Yeah, it was 2015, 16, around that winter. There was a big bubble then, the ICO bubble. So I was sort of coming into Bitcoin just as that happened. And I remember I was honestly I was just lucky. Because I sold everything I had in that bubble because it was like it went from in fiat terms, it went from like $400-500 to like 10 grand. And I was just like, wow, like I'm definitely cashing out of this because it looked like a bubble to me. But I cashed out and I remember feeling this. I describe it as a sinking feeling. Like I actually did believe in Bitcoin's potential. So I started buying back in, unfortunately, at a much higher price. But in all circumstances, I'm not really interested in trading Bitcoin. I'm interested in how Bitcoin fundamentally changes society, changes technology. It is a technology for the next 100 years. So I feel it's very important to get behind its development and support. And what I want to see happen is increasingly viable commercial businesses coming to market, leveraging Bitcoin's properties, because these are the stages we need to get to ensure mass adoption. And I don't necessarily believe that is in conflict with Bitcoin's sort of supposed ideals. I think they can be maintained while you prove business models.
Got it. Well, I've got so many follow-up questions because while I wasn't around during the Bitcoin era back in the ICO era, I mean, I wish I was, but like I only got into Bitcoin in 2021, early 2021. So, like going back to what you just told me about the VC, because you were looking at multiple different projects, and one stuck to you, which is SetBD. So, like as a VC mentality, when you're looking at so many early projects, what exactly are you looking for? Because like when you met SetBD, from what you just told me, it was just like 1 month old project. Is there anything that you feel like, okay, these are the green flags that maybe we could set up a second meeting, or maybe like, okay, these are the red flags we probably want to avoid?
Mm. Yeah, it sort of evolves in stages, or at least that was my experience of it. So I was fortunate in that as a banker, I worked with Series A through like Series H stage companies. I worked with public companies I saw sort of businesses at various different degrees of success. And then in venture, I've always actually found myself very drawn to the earliest possible moment. Like the closer to the actual idea I have gotten, the more excited I become. It becomes a very creative endeavor at that point. But when you get that early, obviously you've got very few signals against which to make a decision. So you tend to be drawn to the founder, their experience, their go-to-market plan, and their conviction. So with ZBD, what was going on there was the first conversation I had was with Simon, who's the CEO, and he was describing to me that he saw a use case for Lightning in video games, and it was based on his own background, where he had worked with Nexon, the Korean games publisher, and he had seen the payments problems they had firsthand. And he also saw he was working at Bitstamp. He also saw the growing potential of Lightning and was excited by micropayments in games. And if you know anything about the games industry, it is actually that it thrives and is built on microtransactions. So I thought to myself, looking outside in, well, maybe there is an outside chance here that you can get a Bitcoin payment network going specifically because of the need for microtransactions. And I'm talking transactions that go less than $1. The second thing that sort of really built my conviction in those very early days was Simon, and then Andre, who I also later met, who's very into Lightning. He's CTO at ZBD. They had both seen that if you're going to provide this kind of service to an industry that deals with teenagers, parental consent, all of this stuff, that you needed to actually be set up to look like and act like and behave like a regulated payment institution, the typical ones they normally use. So there was this willingness to actually go and acquire payment licensing and do things properly. a quite clear articulation of the challenge the games industry faced. And I was very firsthand aware of this with all the work I was doing in video games. So I saw the kind of stars aligning there. And then as you get larger, there are more metrics you look for, like customers, revenue, gross margins. These are the types of things that become important from, I would say, Series A onwards.
Yeah, that's very interesting because you are not only running SetBD and you're also the COF of Antidote. I wonder how these roles actually complement each other. Like, how do you support each other?
I don't know where I find the time, but no, it's interesting actually because I have worked with founders who have come out of incubators in the fiat world, and in my experience, it was a very mixed bag. I don't want to throw shade on any particular incubator or accelerator out there, but quite often they're guilty of taking a lot of equity very early, which is off-putting to incoming investors and demotivating for founders. And then when you look at what the company gets out of the incubation on the other side, it's not great. And I think if you really look into it in a very simple framework, many of these incubators are taking in 20, 30, 40 companies at a time in one single cohort. And of course, you can't work well with a founder then. There's just too much on the plate at that point. And there is no one size fits all template for any given business. So I was looking at things through that lens. I could see quite clearly that founders needed help. And I thought, well, what if we just approach this differently and we say, I've got limited bandwidth. My co-founders at Antidote, Andy and Michele, also have limited bandwidth. And the reason we have limited bandwidth is because all of us are practicing entrepreneurs. We are actually in the process right now of living through scaling up businesses at different stages of their lives. So I thought, well, hopefully there's no better way I can walk the walk, so to speak, as by demonstrating to folks the challenges we've gone through at ZBD and scaling up to Series C, or the issues that Andy, my co-founder, has faced with needing to go through multiple CTOs to get the product right, or discovering how difficult it is to figure out a go-to-market strategy when you deal in Bitcoin. These are all things I felt we could bring to the table to be genuinely valuable. And then we marry that with a very bespoke treatment to our founders. So the most founders will ever incubate in one cohort is 4. The first cohort is going to be 3 founders. And that is to ensure that we can actually work with them in a much more hands-on manner. And it is meant to be extremely practical. We have a curriculum, but it isn't go do this homework and then come back to us and great, you've got an A on that. I don't feel that actually does things for a business. I think you've got to poke the universe, make things move, and do things practically. So I'm more inclined to say, hey, how do you figure out go to market? Well, by next Friday, I want you to have spoken to 10 prospective customers and don't get less than 10 and don't give up, and then come back and tell me what you didn't know. I find that drives better results.
Yeah, so speaking of Antidote, you chose London to be the base ground, and specifically Hatton Garden, which is a area that is full of historic jewelry districts. So, is there a reason why you chose London as your home ground to build Antidote? Because, not gonna lie, you're not the first British founder that I speak to, and what I come across is that there are many criticism, like so much criticism about the UK government. Like, do you come across stuff like that, or you think like London is still the best place to build Bitcoin?
I wouldn't say it's the best place, but as my accent gives away, I am British. So starting in London was it was a little bit organic, but there were multiple reasons for setting up in London. So I had through ZBD, I had been to all of the Bitcoin hubs around America, around Tokyo, in Europe, and I found it quite staggering that the UK wasn't doing anything about this. And I could also see that the American hubs were really structuring and organizing and giving Bitcoin a momentum, both politically, culturally, and in business, that it very much needed. And I felt that the UK was you had folks like Rishi Sunak, our former prime minister, saying like, we're gonna be the center of Bitcoin, we're gonna be world leader, and then absolutely nothing following through. So I'm a believer in both radical optimism and just doing things. So the mission we undertook was, well, let's set up the hub in London and prove that you can do this in the UK, because I know a lot of British Bitcoiners and I know a lot of British entrepreneurs, and I know that the spirit is in there to actually build things. And we're also very specialized when it comes to financial services. Regardless of how you look at London, and never look at London through a social media lens, because if you look at anything through a social media lens, you're just feeding yourself spam. But if you look at the business, the top fintechs in the world are all in London, right? Revolut, Monzo, TransferWise, all of these are based in London. They're based in London because there is a depth of intellectual capital married with really, really experienced financial services in a 24/7 market. Regardless of any political oversight, that talent still exists in London, and the flight from London is also grossly overstated. What I can see here, and what I've been attending, is a lot of groups and meetings that are London centric about making sure we do change the direction of the economy in terms of a pro-growth and pro-progressive movement. But you can't do that by shouting on social media. You must do things. So it's simultaneously a hub that was started here because I'm local and I could see the opportunity for a hub in London, but also because I know the talent is here, the venture capital is here, all the major VCs in Europe are still based in London, whether that's Balderton, Index, Atomico, Sequoia, Excel, they're all still in London. So yeah, don't believe Twitter, and actually look around, and you'll see that there's still a capital hub here. Governments come and go, and there's a real opportunity to build business.
Awesome. So, kind of going back to what you just told me, like the UK government has been shouting to around like the whole world that UK is trying to be a digital asset hub. But like, from what I just heard from you, is that the UK government is not doing much. It's like, most of all, it's like it's a pitch that they tell the entire world. So I wonder, what is the stuff that you wish the UK government would do? Like, is there like, what is the situation going on in the local land? Is it like there's regulatory hurdle, or there's something that you really wish the UK government would implement?
It's interesting. My perspective is slightly the other way around. So I feel that part of the malaise that many economies, not just the UK's, are feeling is because our default question is, what is the government going to do about X? When in reality, I believe the question should be, when is the government going to get out the way? And I don't mean that in a combative or acerbic sense. What I mean is that innovation is not driven from the top down, it is driven from the bottom up. Private markets, private individuals seeing opportunities and being enabled to capitalize upon them. Bitcoin is still a very early industry, and if you look at some of the success that it has driven in America, particularly around financial institutions and payment activity and Bitcoin related products over there, that came about from actually rolling back regulation, from stepping out of the need to govern it and oversee it. The same could be said, I believe, in the UK, where the bulk of the discourse is around when is the FCA going to do X, Y, Z and give us a crystal clear framework, etc. The reality is that the FCA framework is not that hard to work with. It's just not very user friendly if you're building a consumer Bitcoin application. But the wonderful thing is there are already licensed platforms that exist out there in market today that a developer or entrepreneur in the UK can make use of, and then they don't have to deal with that. So to be specific, if you're building a Bitcoin app that you need, to do licensed payment activity with, you can choose between ZBD, Coinbase, Strike, Striga, many others that are out there in market that offer a licensed API against which you can build applications. So why not start there? Not every Bitcoin business needs to build the foundational architecture. The Bitcoin businesses that I believe will be successful will stop doing that and will focus on the customer experience and solving real problems. long-winded way of saying we don't need to worry about the FCA. And the less the government does, the better, because I don't actually believe it's in a bad place now. I believe that there's a lot of complaining.
Yeah, so one thing that I sense from this conversation is that you're very Bitcoin cater, like Bitcoin only. So my next question is that why don't focus on the broader crypto market? Like there are millions of coins out there. Why Bitcoin only? Like why draw that sharp line, especially when so many other programs chase every chain, for example, Solana?
I just maybe I've been long enough in the game. I don't know. I just struggle to see the point in anything else. If you're not building money, what are you building? Like therefore, like everything else can be done better with a centralized database. When you look at those chains and the problems they are solving, ultimately they're building businesses with one customer, or they're managing everything themselves. It's not You're not building an open monetary network. An open monetary network has the most enormous TAM I can think of any industry. It's kind of like being able to own a share of the internet when it's growing from like 1983 to 2003. That's an enormous amount of value accrual. This is a many-layered and deep question, and a lot of people spend way too much time arguing about it on the internet. But ultimately, that most people, when they're working in other coins, they're still holding Bitcoin. You've got to ask yourself, why are they doing that? And the other reason is that the other coins don't solve the problem of government debt. And if you want to make people's lives better in the 21st century, you need to get out of the government debt. You need to be building a new financial system which benefits from internet era scalability, sort of network effects, etc. The internet as an economy, I like to help people think this way. The internet, when you think of it as a macro economy, it is bigger than any single nation state. It is the largest economy in the world. It includes 5, 6, 7 billion people. And it has its own set of rules, its own set of governance, its own set of information transfer. It's tariff free. And as of 2008, 2009, it has its own currency. So the internet is the most important economy in the world. It is what will drive the growth of global society throughout the 21st century. Why not just start using internet money and make sure it is successful, because it will make all of our lives better.
Yeah, one thing you just mentioned that I like the statement really much is that a lot of the so-called crypto investors, they are like majority in Bitcoin. Like Bitcoin is bringing most of the monetary return for all the cryptocurrency or digital assets out there. So I wonder, like speaking from your personal experience, like after meeting so many Bitcoin startups, Bitcoin founders out there, like are they generating any money, or like basically making majority of the money from building on Bitcoin networks, or they are, because right now the market conditions are quite difficult, not gonna lie, or there are other maybe stream like income stream in your opinion?
I think if you're building a business in Bitcoin today, there are a few ground rules you need to understand or set yourself. Because I joke about this with the founders we work with, because it's like I sympathize, I get it. When you see Bitcoin and you get it, you can't unsee it, and it changes your worldview. It changes your perspective on many, many things about the way we run society, economy, the way we build businesses. There's many, many second order effects that come out of concluding that Bitcoin is going to work. And you kind of then need to, I put it this way to sort of tease people, but you kind of need to deprogram yourself. So you need to come back out of the rabbit hole, and you need to look up, and you need to look around you, and you need to realize, like, to sort of draw a metaphor, most people are still in the matrix and they're happy, even if they're getting grumpy now. And that means you've got to build a business that can cover its OPEX and its costs in dollars or whatever your local currency is. This means you're going to need to drive some near-term revenue in fiat. And you're probably the most, apart from your product, probably the most valuable way you're going to use Bitcoin as a business today is using the profit to buy it and use it as a treasury asset and leverage its inflation resistant properties. But thinking about, an actual product today, you mentioned, the market's down right now. Build a solution that doesn't depend on the cycle. So ZBD serves the video games industry. The video games industry does not care what is happening in Bitcoin. They do not pay even the slightest attention to it. They don't think about it. They don't ask us about it. They don't talk about it. And the Lightning Network rails we provide continue to work to send payments to and from gamers, regardless of the price of Bitcoin. So this downturn, for example, has been completely ignored by us internally. And we actually remarked on it culturally just the other week. We were like, wow, everyone is talking about blood in the streets, etc. No one at the company internally cares. None of our customers care. No one has asked us about it. And I think that's a signal of a resilient business. You want to build a business that doesn't depend on the crypto cycle. A business that depends on the crypto cycle, I think, is still chasing that pump and dump mentality, which belongs in the past.
Yeah, I like that a lot. So, like after meeting all the founders, or maybe coming across so many ideas in the industry, like after seeing so much, is there a certain narrative or certain aspect in the Bitcoin world that you are, everyone, like the viewers out there, maybe should pay close attention, that you're very optimistic about?
Yes, there's a few. So I can see. This is going to maybe sound frustratingly open because I find it hard to articulate. But I believe that sort of Bitcoin fintech solutions are beginning to enter a mainstream demand area. Let me give you an example. There's an app that's come out of France called DeBlock, DE Block. And now this isn't a Bitcoin only app. It's got all the cryptos in it as well. But it's a non-custodial crypto first consumer finance application against which you can bolt on fiat. And this is sort of, to me, getting more symbolic of how we're going to approach finance, and particularly consumer finance, through the course of this century. The unbanked can have a bank account. Everyone is global and everyone interacts with people in a global marketplace called the internet. You don't need, the only real friction comes when you've got to interact with local currency, and therefore you build wallets and services that are Bitcoin and internet first, where just for convenience you can add cash out and on and off ramp layers later in other markets wherever you're living. That's a very interesting trend for me. So I call it sort of, consumer fintech that's Bitcoin powered. I also believe that there are elements of Bitcoin's cryptography that can be leveraged now to solve things like internet identity. So we are deep in an era of a KYC'd internet. Increasingly, governments are reaching for the ban hammer in terms of who can have access to what. Increasingly, to fight bots, AI, etc., everyone's being asked to pull out their passport, take a photo, etc. As much as we're doing that, it's also being proven that we can fake these passports trivially with generative AI. So you've got this kind of weird battle going on where it's like, who's who, how do you access what? And, we need to age gate things. Well, Bitcoin gives you a means of providing both an identity and a wallet in one key. And that key can be, you can sort of disclose things selectively. So if I'm going to a gambling website, I might want to attest that I'm over 18 such that I can gamble, but I may not want to give my home address. And you can leverage Bitcoin cryptography to do that. And I think that's an important part of defining what is an internet passport, so to speak. That's an area of focus for me. And then the last one is actually more on the B2B side. I'm beginning to believe Bitcoin payments, in terms of the core infrastructure and the companies that will lead that charge, is established. The question is, how much of a growth market is it going to become over the next 4 or 5 years? My attention therefore turns at the very early stage to products built around insurance, Bitcoin as collateral for fiat lending. I think institutional grade custody still isn't properly solved in terms of, we still really haven't leveraged Taproot to do powerful multi-sig things. So there's sort of several layers I look at, but I try to keep an open mind in general. I'm most surprised by the founders that come and talk to me and the ideas they're having.
Yeah, so just to summarize what you said, like identity is a really good use case, and consumer, so something more down to earth that people would actually use day to day. So for the founders who are watching this channel on Roxom TV, the next question maybe they will ask, like, what makes a strong antidote application, or it's just more like a case by case based on the ideas that they have or the how they actually implement the whole idea?
That's a good question. We're definitely not. We're a little bit beyond the idea stage, and I do challenge founders very deliberately on this. We live in an era where anyone can vibe code any old slop, right? And you need to, how do you set yourself apart? If you're going for seed funding now in traditional finance, forget Bitcoin for a minute. The expectation is increasingly that you already have revenue. Because I know people who have vibe coded their own apps and they're making thousands of dollars a month, basically running a little micro hustle on the side. And so if you're going to build a 10x business, surely you're capable of driving some revenue or proving that you've got an application. You know, it does depend on whether you're going B2B or B2C, but we're definitely looking for a founder or founders who have an MVP or a just pre-MVP product, something that is demoable, usable, that really captures the core concept. Ideally, if you're B2C, some users; if you're B2B, a customer piloting or testing the product. And if you're really strong, you know, even a little bit of revenue. And then what we're about is scaling from pre-seed to seed, really. So we take that sort of proto idea of a business that is kind of halfway there, and we help with hiring, talent matching from our own database. So I've already matched one of our founders with a fellow co-founder to help him out. I'm looking to do the same with another one of them. That's an important piece of this, is that actually sometimes very technical Bitcoiners need a commercial person to come in and help them, and I encourage that, and equally vice versa. Commercial people often need technical help. But my real takeaway point is the bar is high in an era where Claude Code can do half your stuff. Therefore, come with a product, a fully developed idea, and a rough concept of how you're going to go to market. Then you're probably a good fit for what we're looking for, and we feel we'll be able to add the most value.
Yeah, one thing I noticed is that you host a lot of in-person weeks. Like you've hosted the full SetBD team for in-person interaction at Antidote HQ as well. Like even though they are working remote, so I wonder like what changes when a Bitcoin native team work together. What is the whole vibe, the environment look like, or is there like a could you share some examples like after meeting in person, there's some okay great ideas that being built just because we have that human interaction finally?
Mm. It is the osmosis of ideas that I look for. You probably picked up from some of my acerbic comments. I'm not a big believer in social media's value to society. I think it is more of a distraction than it is a facilitator. It's not to say it's all bad, but ultimately I feel that like opening a feed and rolling through it on your thumb is like opting into spam. It would be like deciding to open your Gmail, click on the spam folder, and then go mail by mail. I don't really understand the user behavior anymore because most of it is junk. What the social media networks have already observed, and that you see this professionally as well, is that people have siphoned off and formed micro communities on WhatsApp, Telegram, Discord, whatever. So it's all kind of like gone elsewhere. There's nothing social about the big social media anymore. Therefore, you know, the same happens in companies. What you see is that when you're fully remote, everyone's got their mission, everyone's got their thing they're working on. But if I'm in the room I'm in right now, if I have an idea, I'm all by myself. And to communicate that idea and bounce it around and let it float, let it morph, let it grow, you need to be in person. There isn't a way to replicate that digitally yet, and we can strap on Apple's slave goggles and pretend that we're doing that, but it doesn't work, not in the same way. When you bring people together in a physical space, I took inspiration from like Andy Warhol's Factory and other kind of creative projects. You let people nebulously hang out. They're all kind of affiliated around the same general idea, but there's a very clear structure and mission to this. So what Antidote is not is a casual hangout place. but what Antidote definitely is a room full of aspiring entrepreneurs who are all interested in building world-changing products on Bitcoin. And if you put those people together in a room, they start to solve problems. I'll be extremely happy if two of our founders actually find out that there's such a good match that they want to pivot entirely and start a whole new company together as a team. That excites me. That's a signal of success to me. And you can only achieve these things, in my experience, by putting people together. It's also why Bitcoiners are so drawn to all the conferences. As soon as you're collaborating in person, the rate of information transfer, the ability to read body language, which is 80% of communication, it all just comes through and it comes flooding out. So yeah, big believer in person. I think it is key to actually succeeding, particularly in the early stages when you're really in a kind of bunker building your own thing and in the hardcore belief that you're going to change things.
Yeah, I mean, I'm completely with you. Like personally, I think Metaverse is full of BS. So I'm not a big fan of that. Like I'm a big fan of the human interaction as well. So moving on, because we are towards the end of the interview, I kind of want to talk about the future of Antidote because Antidote, it has been around for not a very long time. I wonder for your vision, is there any major milestones that you could share, like something you really want to achieve maybe in 2026 or maybe in 2027?
Yeah, in the near term, we're looking to prove our value to the Bitcoin ecosystem, particularly in the UK, and demonstrate that there is a very real and vibrant and high potential community in the UK that can contribute to Bitcoin globally. That's sort of the near-term goal. And if I look at a long-term goal, it is that we play some small part in shifting consumer thinking around Bitcoin, shifting macro narratives around Bitcoin, particularly obviously in the UK where we're based, and helping society to understand the benefits it will bring to them, to itself. I mean, I do believe that fundamentally, when Bitcoin is successful, it's going to be looked upon as one of the greatest wealth redistributions in history, and it won't hopefully have been done with violent revolution or political ideology. It will have happened through adoption of, quite simply, a better money that is built for the future, instead of plugging the past into the internet with all of its problems.
So speaking of the future, let's shift gear a little bit. I want to talk about Bitcoin. So in your opinion, how does Bitcoin would impact TradFi next? Because people keep talking about, okay, traditional finance would be disrupted by digital assets. In your opinion, where is Bitcoin going next?
Ooh, I mean, when I pull my head out of the sand, I am increasingly of the view that if you look at I'm looking at very big trends, or I'm speaking to very big trends at this point in time. The vast majority of people have absolutely no interest in spending Bitcoin. They've understood after 15 years ish, I think it's 17 years now, that Bitcoin is a good store of value. Tends to go up if you hold it long enough. They're still thinking in fiat. They're treating it like a savings vehicle. And I don't think we're anywhere near the transition to medium of exchange in a consumer facing capacity yet. So me sending you Bitcoin, you and I might do that because we're enthusiasts. But if I go and get a taxi in London, or I go and and I offer to pay in Bitcoin, it is 1 in a million that someone's like, oh yeah, let's do that. And then it's even slimmer chances that they're on Lightning. There's all these extra steps. So we're quite away from that. And therefore, when I look at TradFi, my present thinking is that it seems to me more likely that consumers will continue to use government paper to transact with one another, but that government paper may be backed very significantly by Bitcoin to shore up the central bank finances. It seems like the path of least resistance. It's not my preferred outcome. I do want to see Bitcoin sent and spent as everyday money, and I do believe we'll get there, but I don't believe that's on a 5 to 10 year horizon. I think on a 5 to 10 year horizon, you may see that the pound, the euro, the dollar are all backed significantly buy Bitcoin to give the wider bond markets comfort that there is truly collateral behind all this debt. That seems like a more plausible outcome to me. And when you look at least at present, and my opinion can change and I can also be wrong, but the where I hope that gets us to is a world where the financial institutions start to learn to speak to each other on a Bitcoin rail. So addresses make sense. B2B finance occurs on chain, large scale M&A occurs on chain. The more that it embeds itself in the ecosystem, the more of it will spill out and over into the consumer side of things, where you're already seeing mainstream banking apps offer Bitcoin as a savings product. Maybe they'll start to offer you a Bitcoin spending wallet. You'll begin to see Spark or Lightning wallets appear in consumer applications. But yeah, again, I think that's maybe 10 to 15 years away. There's still huge UX and usability hurdles, as well as very poor general person understanding of the mechanics of Bitcoin. And the foot gunning risk is extremely high.
Yes, I mean, I completely with you. Like Bitcoin right now is still extremely early. TradFi is basically dipping the toes into the whole Bitcoin scene. So yeah, in the next 5 or 10 years, I'm with you. Like I don't think the general adoption is here yet, but like down the line, long term, I'm very optimistic about Bitcoin. So it has been a pleasure talking to you. If for our viewers out there, they want to learn more about Antidote, basically, where's the best way to reach out to you guys, or maybe apply, or maybe pay a visit?
Absolutely. So we're on X at Antidote BTC, which I think you've got on the screen there. And our website is antidotebtc.com. And on our website, you can apply as a founder, you can apply as a member, you can register your interest as an investor. There's also the ability to put yourself forward as an operator. So if you're looking to work for a Bitcoin company, we'll look to talent match you. So all of that is detailed on the website, as well as how to visit if you want to pop in for a day.
All right, amazing. So that brings us to the end of today's show. So a big thank you again to Ben for joining us and sharing his insight. Really appreciate you taking the time. Thank you everyone who tune in and stay with us today. We've got more great shows lined up here on RoxomTV with other guests throughout the week. So as for me, I'll be back Monday to Friday at 3 a.m. Eastern Time. So make sure to catch the next one. Thank you guys for watching. Take care, and I'll see you guys tomorrow.